the ultimate guide to filing your crypto taxes in 2025. From the 1st of January 2026, HMRC will have direct access to your cryptocurrency transactions. HMRC will be able to see exactly what you've been buying, selling, and swapping across various exchanges and wallets. If you've been declaring your gains and your losses, you might think, hey, I've got nothing to hide. If you're in this group, you might be okay. However, if you've made even the slightest mistake, take it from me, HMRC will be on you. If they think there are any issues, it's up to you to prove otherwise. Now, if this is starting to scare you, don't worry. In this video, I'll be walking you through exactly how to calculate and check your cryptocurrency gains and losses in the most straightforward and tax efficient way possible. So if HMRC do come knocking, you'll be able to put them straight back in their place. Whether you submit your own tax return or use an accountant like myself, the process and the software that I'll be sharing with you today is what I use with all of my clients who have cryptocurrency gains to declare. So don't worry, you're in safe and experienced hands. If you're in the minority who haven't declared your gains yet, whether that's through an honest mistake or something deliberate, naughty, then these changes will be a bigger issue for you. If you've got any unreported gains from previous years, or if you're not sure if you've been calculating things correctly, now is the time to act. Don't worry, there are steps you can take to protect yourself and reduce any potential penalties. I'll be going over these later in the video, but please do take action. HMRC really won't look favourably if you don't submit things or at least try to come forward on your own. So first off, what does HMRC expect from you? HMRC expects you to keep a detailed record of absolutely every single transaction, including the date, any amounts, any associated fees that you paid with those amounts, and on top of that, they expect you to calculate every transaction into GBP. And this needs to be at the time of any transaction event. And this is before we even start talking about paying your taxes. Now, don't worry, there's software that I'm going to suggest, and that kind of helps do all the heavy lifting here. But before we talk about that, I'll give you a quick overview of how the taxes work, especially for crypto gains, if you're not aware. In the UK, there are two types of taxes that you could owe on crypto. Number one, there are capital gains, or CGT. These usually apply when you sell crypto. However, what people don't always realize is that you can also have capital gains when you swap or spend crypto. Even swapping one token for another can trigger a taxable event. Calculating capital gains can be relatively complicated, especially if you're buying and selling tokens within 30 days of each other. Again, it's why I recommend using software to do the heavy lifting. The second tax that applies is income tax, and this usually comes into play when you make earnings through staking, mining, or DeFi. It's similar to if you have interest in the bank or dividends from stocks and shares, and it's taxed in a really similar way. It's much easier to calculate, but the transactions can sometimes be overlooked or missed, especially at higher transaction volumes. Manually tracking and calculating all of this across multiple wallets and exchanges can be incredibly time consuming, and the more transactions you have, the higher the risk of a mistake. And that's where most people go wrong. That's where the software, Koinly, that I recommend comes in. So Joe, what is Koinly? Koinly is a piece of software that helps you easily calculate and prepare your crypto filings. Personally, I use Koinly, and every time I have a client who needs to have cryptocurrency gains or losses prepared, I ask them to use Koinly. So how does it actually work? First, it connects directly to any exchanges, wallets, or blockchains that you have via API. It also has the option to manually upload CSVs if there's any other platforms that it's not connected to. Second, it pulls in all of your transaction data and matches transfers between your own wallets and other accounts. Third, and this is where the real magic happens, it calculates your gains and formats everything in accordance to UK tax rules. It even uses HMRC's share pooling method to calculate cost basis, so your numbers line up with exactly what HMRC expects. I can't stress this enough, but as soon as HMRC have access to your data, they will start running similar calculations themselves. So it's really important that you can do things exactly how they expect them. Otherwise, penalties, late payment interest, and a lot of stress is going to come your way. So here's how to calculate your gains or losses using Koinly in 6 easy steps. Step 1, you sign up. Go to Koinly using the link in the pinned comments below. You can initially sign up for free, so you won't actually need to provide any payment details up front, and you can test things out before you need to commit to anything. Please note that the link is a referral link, but Koinly costs exactly the same whether you use it or not. But if you do, thank you in advance for helping to support the channel. Once you've signed up, set your country to the UK, assuming you're a UK tax resident, and choose GBP as your base currency. Step 2. Add wallets and exchanges. Add each exchange and wallet that you use to Koinly. There are 2 methods for this. Method 1, and the one that I would strongly recommend, is to set up an API connection. The reason I really recommend this is that they're automatic and they update in real time. Option 2 is to upload a CSV file. These can usually be exported from any platform or wallet that you use. The reason I wouldn't recommend using this is the opposite to the first step. It's not live, it's not automatic, and there can be a lot of sort of manual entry that you have to do afterwards. However, if you've got an old or outdated platform, then perhaps you'll need to use a CSV file. Once you've added your wallets to the exchanges, Koinly will begin to process that data automatically. Step 3 is to check your transactions. Koinly will flag missing costs, transfers, or other gaps that it can see. Work through each of these systematically. Often it's just a deposit from one or another wallet that needs to be linked. This step's really important because any missing data can make your gains look bigger than they are, which means more tax, or lower than they are, which means that there's something HMRC can attack and potentially penalise you on. Step 4. Review the tax summary. Once everything's been reconciled, head to the Tax Reports tab. You'll see your total deposits, capital gains, and any crypto income. You can also drill down to see exactly how each figure was calculated. That brings us to step 5. Download your UK tax report. Koinly produces a UK-specific capital gains summary that you can use to fill in the self-assessment tax form. It even generates HMRC SA108, which is a form you can upload directly via HMRC's online system. Having done this for various clients, we recommend attaching the Koinly report. Since it's built around HMRC requirements, it provides mountains of data and avoids the unnecessary back and forth. And don't forget, HMRC will already have that data, so letting them cross-check this shouldn't be an issue. Lastly, step 6, backdate if needed. Now this is crucial if you wish to disclose gains that haven't been declared yet, and I would strongly recommend doing this before HMRC contacts you. Doing this now, before you're asked to, is known as a voluntary disclosure. It's the best thing to do if you've accidentally missed something or been putting it off. I know if you're in that situation, it might feel more a bit overwhelming or scary, and it could be tempting to carry on burying your head, but trust me, penalties do stack up and HMRC are coming. If you make a voluntary disclosure now, HMRC are so much more lenient. And given how much crypto has skyrocketed in the past decade, I guarantee you it's going to be something they're looking at. With Koinly, you can export the transactions from past years. Of course, with the CSV method, you'll need to upload previous year's data from other locations too. If you've opted for the simpler API method, then all of this should usually have already been imported for you. From there, simply change the tax year in question and export your transactions as required. If you do have backdated gains you want to declare and you aren't sure what to do, my details will be in the notes below. Please feel free to get in touch and myself or one of the team will be able to help. So here are the key takeaways. First, get all of your data in one place. Koinly is a piece of software that makes that possible. It's what I use and it's what I recommend to my clients. Number 2, reconcile any transaction errors and ensure nothing is missed. Number 3, generate HMRC ready reports and file them on time, whether that's you handling themselves or via an accountant like myself. 4, backdate if needed. Voluntary disclosure is always better than if you disclose something after receiving a letter from HMRC. Number 5, stay up to date. Keep your Koinly account connected so that future years are easy. One really cool feature of Koinly is that you only pay for the years that you use. So it's not one of those annoying things that you need to remember to cancel and opt out of in the future. And finally, subscribe to this channel so you don't miss more useful content like this. If you'd like my help or my team's help with any of this, please complete the short form that you'll find in the Work With Us link below. Out of interest, what are your thoughts on HMRC gaining direct access to everybody's crypto transactions? Are we living in a police state? Or is transparency better for society? Please let me know in the comments. And as I mentioned earlier, feel free to ask any questions and I'll do my best to answer them. Please don't forget to like and please make my day by subscribing to this channel. We'll have more videos on crypto and other taxes coming out soon. Thank you so much for watching, and I'll see you in the next video.